Hi everyone, and welcome back to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Monday the 10th of March. We're going to move on to the chart of Eurodollar now. Eurodollar certainly had a couple of strong moves actually in the back end of last week on the back of Mario Draghi not being anywhere near as dovish as the market had been anticipating. That produced a run higher on Thursday. That continued into Friday actually, and that broke above that 38.92 key high. To be honest, I was expecting, or certainly anticipating at some stage this week, I think there could still be a bit of a drift lower, a bit of a correction back into the support band 37.75 to 38.25 sort of area. I still think that could happen. I think you've got the RSI back up. 66 is the current level. 65 it reached in December. And the high in December, and 68 it hit in just earlier December as well. So you're up at these levels at which a correction is perfectly possible to happen. However, you would still also point out that these other momentum indicators, the MACD and the stochastics, are still in bullish configuration, looking strong. So I'm only really going on the back of the fact that there's not a huge amount of Eurozone data out this week, and that might give traders an excuse to take some profits off the table. And if you look on the intraday chart, you'll still see these strong moves that we saw that broke above the 38.92 level. 39.15 is the high, and that was on Friday. Just prior to that non-farm payrolls report, which dragged the euro lower, bit of dollar strength there, but that dollar strength has pretty much been already taken out of the euro dollar chart by the drift higher that we've seen in early hours trading today. So I'm still of the opinion, as I said just earlier, that I think there could be some room for profit taking here. So I'm watching out for that. And if you look on these momentum indicators, they're still pretty bullish. You would argue that there's nothing really to go on in terms of big sell signals there. So I still think that could be a fairly orderly bit of profit taking that drags the euro back towards these highs that it had in the back end of February. 38.24 is sort of my ballpark that I'm looking at. The key support that you'd probably be saying that would trigger that would be a breach of that 38.52 mark. But at the moment, as we speak, this consolidation has not really yet this correction has not really yet taken hold. Sort of finding a pretty neutral bit of trading in early European trading today. There's not a great deal of data, as I said. 10:30 comes the Eurozone investor confidence, but much beyond that, there's not really anything to drive this forward, and that's why I think at some stage there will be an excuse to take some profits, which may give you an opportunity to get in at a lower level, because I still think that the fact that Draghi had a chance to talk down the euro, he didn't take that on Thursday. And I think that would suggest that the euro may have some strength left in it at some stage in the next week or so. Anyway, I wish you good luck in your trading on euro dollar today, and I'll speak to you later. Thank you.